Do you want me to cover my trades or not? Or you want me to wait until the next call? Because I want to be respectful of your time.
Can I ask a favor?
Yeah, go for it.
All right. Can you know your pure luck trade?
Yeah.
That you talked about? I think it was Walmart, right?
Mm-hmm.
Did that start as a debit spread?
Mm-hmm. Yeah. And it's in full transparency. Go ahead.
No, because when I saw your video, I meant to ask you that because I'm like, well, I thought he started that as a debit spread. How did you get such a huge return? Because I thought debit spreads were capped. I haven't placed any debit spreads, so this is, this is not. This is one of those theory questions, I guess. But how did it go through the roof? Did you leg out of it?
Nope. That's a great question. No, debit spreads are capped. Oh, come on, Walmart. Show me one with more options. Debit spreads are capped, but the trick is, let me show you the difference here. Okay, let's do this at the money debit spread here. We buy at 91, max profit is 159. Out of the money debit spreads are like out of the money call options. They don't cost a lot, but the profit potential is huge. So now let's come out of the money here to 115, 120. It was only going to cost us 2 cents, but look at our profit potential, 498. So that's all I did. I bought an out of the money debit spread. It's a speculative position. It's like buying an out of the money call option. And so you can see here, it only costs $2, but the profit is still capped, but it's capped at 498. That's an insane return on investment. Now, the way where Walmart ended up when I sold it probably would have made, well, you can look at how much I would have made if I had just bought 585, and if I had just bought a call option, it would have cost me $585. I would have sold for 10,000. So, yeah, if I made the call, I would have made more money. Go ahead.
No, I was laughing. That's incredible.
Yeah,
because that's what I was confused about. That I'm like, how did he make so much of it? Yeah, but
matter of fact, just to torture myself, I mean, like your wife says, let me see how much I would have made. All right, instead of 2,700, I would have made 9,000. So that's really torturing myself now. If I had just bought the call, I would have made 9,000 compared to the 2. So you can see how. That's why I said I don't like debit spreads. I hate limiting my profit potential. And it's also what took me so long to really adopt credit spreads, because I was so used to unlimited profit, 300% return on my investment, that I just couldn't. I was like, what? It makes no sense to trade strategies where your profit is limited. But over time, I could see the benefit. So that's there. In full disclosure, this is one luck. We can pull up Walmart. Luck in the sense that Walmart jumped up 10% on earnings. I did not know that. Hindsight is 2020, right? If I knew that, I don't like my paper trading charts. Let me move over here. If I knew that, of course, I would have just bought the call option for 500. But you didn't know. I didn't know that. Right? It was a speculative position. I risked what I was willing to risk, around $300. So that's where I said it was luck. I didn't know Walmart was going to jump 10%. As a matter of fact, I didn't think Walmart would do anything around earnings. I actually thought it would crash. So I made money in that sense, luck. What's not luck, and people always say dumb luck and this and that. I always make fun of people. I'm like, it's luck, but it's not luck. Why? Because one, I freaking spent a lot of money to learn this. Two, I got my butt to look at charts every day. Three, actually made the trade. So in that sense, it's not luck. When you show up every single day, this stuff happens. It's luck in the sense that I didn't know it was going to jump 10%, but not luck in the sense that I freaking showed up. I placed a trade. And when you do that long enough, luck will find you. So sometimes I get offended. I'm like, well, yeah, it's luck, but it's not luck that I actually show up every day and I actually place trades to be in position to benefit like this. Another disclosure here, this is a cheat. I was struggling with, is this a cheat or not? Because it's a real trade. I made it in my account, but I initially didn't log it here as a 10-minute retirement trader account. I don't know why. I made 2 Walmart trades. One, I logged in here. It was like a $50 trade and made like an 80% return on investment. And I made this trade right after that. But I didn't log it here on the spreadsheet. I don't know why. I made it in the same account. So that's why this went up from 40 to 70, because this trade wasn't part of this thing. And I was like, well, should I add it in because I didn't tell people ahead of time? So I was struggling with that. And I was like, well, it's not a cheat because I actually made the trade. So I decided to, if people want to call it a cheat, I don't care. I decided to take that money and then add it into this account because it was a trade I made in this account. So that's why I went from 40. Last week it was like at 46%. That's why I went up to 72, only because of the Walmart trade. So in full disclosure, it wasn't originally in this spreadsheet. Because you all have access to this. So if you've been following me, you can look at when I made that trade. I think I made it initially on 10/16. Yeah, on the last call, this 10/18 wasn't logged. It was logged on another spreadsheet. So I added this in, and the reason I added it in, so it can help me get to my goals this year. I'm trying to get 60% performance on the account every single year. So since I made another Walmart trade, I decided to add this in. If you all disagree with that decision, I can gladly take it out. If we take it out, it makes me no difference. If I take it out, the count is still up 44%, and I think I'll still hit my 60% goal because I have some trades open. Right now, I still have some current trades open, and if I hit max profit on those, it'll be 1,400. So I'm still going to get close to the 60. It doesn't matter if I leave it or take it out. To me, it's all money I made in my account.
All right, I just want to come in and do a quick edit. And to let you know, I have resolved it. I made an off-the-hand comment how I was struggling with this before the call, this Walmart trade, whether I should add it in or not, felt like kind of a cheat. I finally resolved it. I'm going to take this out, and I'll explain why here in a second. But you're going to see this trade show up again because I've decided to add it to a bonus training I'm going to show you and release mid-December during our break. So where I'm at now is 72%. This trade helped that out tremendously. Without this trade, I think I'm at around 40-something%. So let me take this out. And again, I'll explain why I'm taking this out. So I'm going to put it down here. Yes, we know I made this trade. I'll show you proof of that here in a second. I'll show you my broker account. But without this trade, my performance is now at 44% for the year. Still respectable, but not at the 70. Now, the reason I took it out, I said I was struggling before the call, and it takes me a while to figure out why my spirit is bothered sometimes. Sometimes you can be bothered, but you can't articulate it. And I spent a lot of time, I didn't spend a lot of time. I actually just came to my mind. I'm like, that's why I was struggling with it. It's inauthentic, all right? Here's why. We had well, let's look here. I told you I did not log that trade. We look here in the Walmart trade. I made it on, I think 10/16. Oh my gosh, the scrolling is so annoying. 10/18, I made that Walmart trade, closed out on 11/16. So we can look here, and I told you why I made it. It was an earnings play. We can see here for proof of that. Earnings, here it is, 10/16, 2 days before, took a speculative gamble on apples. So I was in speculative gamble position. Like I was making gamble trades all around earnings. I logged apples here. J&J earnings was out. I'll log that one. And then 10/20 here, I made some more speculative positions. These are high risk trades, so I'm only willing to lose a small amount. So you can see my Walmart trade here on 10/20, but something's missing. The 10/18 Walmart trade I made here. Honestly, I have no clue why I didn't log it. Yes, it's a real trade. Let's show you here my real money account. 10/18, you can see that trade here. It cost me 22 cents overall. 10/20, you can see the trade I did log here. It cost me 64. I sold that for 80 right here. So I forgot what return on investment there, almost double. So 64, sold it for 80. So still made a decent return, just wasn't a lot of money. So I did make it. I don't know why I didn't add it in, but I'm taking it out. Yes, I made a trade. Yes, you could clearly see it was right alongside my other 10-minute trades. So I technically, I guess I could add it in here, but here's why I'm taking it out. Because I told you it felt inauthentic, and I finally got clarity. It is inauthentic. Here's how. We had a live call on, let me pull up my schedule here. We had a live call on 10/19 and then November 8th. Nowhere in those calls did you see this Walmart trade or in my open trades. That is why I'm taking it out, because it is inauthentic. And I was like, you know what? The only reason I'm adding this in here, and this was hard for me to realize this. I'm like, gosh, the only reason I'm adding this in here is because it did so great. And I have to ask myself, if I had lost money on this trade, Travis, would you have added that in there to your performance for the year? Honestly, I don't know the answer, but it's probably no, because it just would have been many other losing trades I made in my account. But the only reason I added in here, I was like, you know what? It made a lot. I did make it along the other side of the trades. I honestly don't know why I didn't log it. I literally don't know. But I only really added it in here because it made a whole lot. If it lost money, I don't even know if I would have, did the hard work or tracking it down or really finding out that I didn't log it. That's the only reason I found out I didn't log it, is because it did so well. I'm like, great. I didn't even log the trade and did so well. Sort of like the Apple trades up here. I did tell you I forgot to log those, and I put in a note here, and as soon as I realized my mistake, I added those back in here, but before the trades played out. So I didn't know if I would make money on these or not. But this one, I only added it in because it did so well. So that's why I'm taking it out. It's just inauthentic. If we had those 2 live calls and I had casually mentioned these, yeah, I'd leave it in here. But because no one knew about it until magically I made a bunch of money and it showed up on my spreadsheet, no, I'm not going to do that. It's going to send the wrong message, and I don't want people. It's the same thing I don't like about the gurus. They hide stuff from you. Wasn't trying to hide stuff from you, but they'll hide stuff from you. And then all of a sudden they'll talk about how much money they made. And you're like, well, you didn't say anything about that all year. Where did these trades come from? I don't want to send that kind of impression to people. That's not what I stand for. So that's inauthentic. You didn't know about this. So yes, it's a real trade. Yes, this profit is going to be spent on a cruise we're going to go on, but I won't put it. So yeah, that's the good news here. This 10-minute retirement trader account, I'm not pulling out any money because I'm showing you the 5-year retirement plan. So bonus for me, pulling it out means now I get to spend that money on the cruise. So anyway, so I'm going to take this out of here. Performance is still 40 something. And if I hit max profit on all of my current trades right now, I still should be close to that 60%. Now, don't feel too bad, because here's a little teaser. I'm going to release a bonus training mid-December. And I'm going to show you, I told you this was a free trade. I'm going to show you an experiment I've been doing in another account. Behind the scenes, I stopped. Here's my old model account. You all saw that it ended the year at 27%. I stopped it, I think, in May or June. I can't remember. But I kept trading this account behind the scenes, experimenting. I use it as my experiment account. So what I ended the year, I think about $7,000 profit. Let's scroll down here to see what a profit total before I wrapped up and closed down that portfolio and started tracking the 10-minute retirement trader. So I ended here at 6,200 profit for the year, and that's where I switched over to start modeling this 10-minute retirement trader. And this is going to be my sole focus moving on. But behind the scenes, I've been continuing trading this account. I use it as my test account, trying to fine-tune other trading methodologies I've been working on over the years that I quite can't get to work, but I'm keep going at it. And I finally fine-tuned it, and that's what I'm going to show you. So let me scroll down here and show you where the profit is from just the 2 months I've been testing out this experiment. And I think I'm ready to show you what the big reveal. So here it is here, nope, that's the core position total. Nope, you can see I made a bunch of trades. Again, I think this is probably why I didn't log the Walmart trade. I think it got mixed up in all these other trades here. But since I've closed down this portfolio, it's made about $15,000 in a couple of months using this new approach I've been testing out. So in mid-December, that's what I want to show you, how I was able to do that and the slight twist I made to what I'm already doing. So I can't wait to show you that in December, and I hope you can forgive me for not logging the Walmart trade, and you can understand and respect why I'm taking out on my performance for the year. All right, with that being said, let me drop you back into the live call.
Last thing I'll say before I stop, because I think you're just going to say something, Peter, is is a 738% return on the money here. I'm not even excited about this, and the reason why I highlighted up here, the reason I'm not all pumped about the 70% for the year is because look up here. Remember this, for those who remember, this was back in September. I lost $2,300 for some stupid mistakes. So, and I already said that these results are not typical. And the reason I don't get excited about the 72%, because I know it's not if, sometime in the future, I'm going to do something stupid. I already know that. I'm going to make another mistake. And hopefully it's not another $2,300 mistake, but I know I'm going to make a mistake and I'm going to lose money. So that's why I've learned over the years to tone down my greed and excitement. Because I'm like, Travis, you get stupid. Every time you do Every time I do great, I always get stupid. It's like guaranteed. I usually get stupid afterwards. So what I've learned to do is take a trading fast, which is why I'm not trading really anymore for the rest of the year. I might trade 1, 2 trades, but I'm pretty much done with this account. My open trades, I'm just going to let them play out. And I don't think I'll open any new trades because I'm trying to take a trading fast so that my ego subdues down and I get to the point where I'm looking at my performance and it's just numbers on the screen. But if I get super excited or super emotional, if I'm high emotional, either good emotions or bad, like excited or fearful, then stupidity usually follows. And what usually follows after that is me losing money. So that's my another emotional management trick I use to make sure I don't screw up and make a lot of money. And that's honestly what happened here back in September. The reason I lost 2,300, I got on a Tesla high. I had made a lot of money with Tesla. Tesla was doing great. And I just had a Tesla bias. And I just risked all of the profit I had made for the year. And we can see what happened. And that's what I mean. I got stupid. So that's that.
It's someone else's money.
Yeah, we're profit. You're right, because I didn't lose my original 10 grand. I started with 10 grand. You're right. I did not once at all this year lose that attention. It was just profit I lost. So that's the way you can look at it.
So Brian had a good question. How did you choose your entry point for your Walmart trade? What made you decide to buy that out of the money debit spread so far out of there?
One, I used Market Club. 2, earnings was coming up. So it was an earnings trade, speculative earnings trade, and I risked what I was willing to lose in that account, about 300. So I got in because of Market Club. I actually placed 2 Walmart trades. I placed the first one to take advantage of the entry here. Again, I made money like $80, $90. I can't remember exactly how much, but I took that profit and I got back in the trade with my profit ahead of earnings. And I risked my profit. So, and out of earnings, I just got out of the money just because earnings was coming up. So I didn't think I would make money. I actually thought I would lose money, which is why I didn't risk a whole lot. So I picked it because of Market Club. It was a regular Market Club trade. But since earnings was coming up, that was my earnings play. Just do out of the money just in case it shoots up. And I just got lucky. So that's it. As far as like, I don't do percentages like 10% out of the money, 3 steps. No, I'm not that scientific. I just kind of look at risk. I'm like, how much is this going to cost? And that's what I do. I rarely ever break out the calculator to see if it's like 20, 40%. Sometimes I will, but usually I don't. I just pick one that seemed to be reasonable in cost, and I went for it. So any other questions?
No, but I think David has a 10-pound brain because, David, some of the things you say, first law of thermodynamics, equilibrium. How do you know that stuff?
Let's see.
And then he says, I like simple. I read his so for those of you guys, I read David's comments, and he goes into such great detail on his trades. It's sometimes, David, it takes me, I have to like, I don't know, take a shower and come back to it because sometimes you go in such great detail. I'm like, oh my gosh, what am I doing wrong? I don't go into that much detail, which is awesome. I think it's awesome how the detail you go into it, but I think he has a 10-pound brain.
I know sometimes I find myself saying, I'm not the best person to help you with this. I'm like, my brain works too simple. I was like, I'm not that smart, actually. So believe it or not, yeah, I do not consider myself to be a smart guy. What I do consider myself to be is to take smart stuff and then kind of simplify it down to my dummy brain so that my dummy brain can understand it. That's why I teach the way I do. I'm like, man, these guys start talking about gamma, theta. Oh my gosh, it stresses me out. I'm like, I don't know what the heck you. And I was like, I've been trading options for 15 years, and I still don't know what half of these guys are talking about. So it takes me a while to kind of understand what they're talking about, and then I kind of break it down to a simple manner. That's how I translate things. And one last thing before I forget, this performance here. Again, I will keep saying this. I don't want you all to think this is normal, 72%. In what? Not even a year. I've only been trading this since May. This was done. People think when people would see this, people would assume I was super aggressive and super risky. But if you followed me, you've seen I followed the 210 formula. This, and I'm saying this for encouragement. Yes, the results may not be typical, but this should encourage you that You do not have to be super aggressive to do great. And the reason why, think of options are like a motorcycle. That's the way I look at them. They're extremely powerful. If you're reckless and you drive 130 miles per hour down the road, you're most likely going to eventually wreck and die. That's what happens when you're aggressive with options. You take a very leveraged vehicle. Again, Peter had 100% return his money in 4 days. But you can also lose 100% of your money in 4 days. People forget that. So when you take a leveraged vehicle and you're aggressive with it, it works until it doesn't work. And it's a doesn't work part that's hurtful. It's the pain of options. People always focus on the power of options, but they don't think about the pain of options. And the pain of options are, if you risk 20 to 30% of your account on one trade, yeah, you can double, triple your account in no time. But then if you lose that much, it's going to take you, no lie, 3 to 4 years to get it back. And I won't show you the numbers to prove that. But if you lose that much of your account, it's going to take you about 3 to 4 years to get it back. Options are already leveraged. They're a motorcycle. You can get to your destination safely on less gas. And that's the way I think of leverage. A motorcycle can get to the same place as a big truck, but you're going to get there in less gas. Options, we can get to the same destination, but we don't need as much money. So in order to get this 8% S&P return, I had to have 100% of my account at risk. That's great when you make money, but it's when the market crashes, I don't want to lose 40 to 50% of my account. Following a 210 formula, did I get to my 8%? I sure did. But if the market would have crashed on me, I would have lost 2, 4, maybe 5% of my account versus 50% of my account. So this is proof that you can be conservative because you're using a leveraged vehicle. You get the power of options. You get those accelerated returns, but you avoid the pain of options. You don't lose a lot. Okay, so just think about that. If you ever struggle with, Travis is only risking 1 to 2%, I'll never, I've even had a student tell me that. I will never get rich risking 1 to 2% of my account. That's what he told me. And I'm like, oh my gosh, just do it, okay? And you can believe me later. just do it. Risk 1 to 2% of your account. You're already trading a leveraged vehicle. How much did I risk on the Walmart trade? It wasn't even 300 because I was using profit from another trade. $100. If Walmart didn't pan out, I only lost 100, but it did pan out, and I made a 738% return on my money. So that is how you experience the power of options and avoid the pain, is by being conservative with a leveraged vehicle.